You're listening to the Business Wealth Impact Podcast, your source for empowering information and cutting-edge ideas from the world's top minds. I'm your host, Jeanne Amlour, founder of seven-figure coaching company, Jeanne Amlour International. Join me on a journey to unleash your potential and create your highest success. Welcome to Business Wealth Impact. Welcome to another exciting episode. Today we have another exciting guest, Dan Nicholson. Dan is a serial entrepreneur since birth and author of Rigging the Game, How to Achieve Financial Certainty, Navigate Risk, and Make Money on Your Own Terms, deemed a bestseller by USA Today and the Wall Street Journal. In addition to founding the award-winning accounting and financial consulting firm, Nth Degree CPAs, and being named a top 40 under 40 accountant globally 4 times, Dan has created and run multiple small businesses, including Certainty U, Certainty News, a platform that's syndicated to over 1 billion monthly users. Dan also hosts the Rigging the Game podcast and is a consulting producer for PBS's Opportunity Knocks. He lives in Seattle with his wife and 2 children. Welcome, Dan.
Thanks for having me on. Excited to chat.
Yes, so welcome. You do a lot of exciting things. I want to start hearing more about that. First of all, tell me about your book and why is it important for the person that needs to read that book?
Yeah, my book is really my operating system to help show small business owners, or what I call purpose-driven entrepreneurs, how to get what they want on their terms without compromise. And it's really born out of my own failures and born out of unlearning a lot of what I thought I knew about business. And I find that that's sort of the path for many of us in entrepreneurship, is a lot of failure and a lot of unlearning.
Okay, so the book is not just about accounting, it's about actual business.
Yeah, there's really no accounting in the book.
Oh, okay. So give me an example of some of those failures you've had and what you've put in the book that's so valuable, because I'd love to, have people shortcut certain things if they can just by listening to you and reading the book.
Yeah. So when I finally started my business, Nth Degree CPAs, which was really my first full-time gig as an entrepreneur, I came into it feeling like kind of a hot shot. I'd done this prestigious fellowship, worked for a top global firm, worked for this guy, Warren Buffett, maybe you've heard of, and done a bunch of things that look really good on paper. And then I go into running this firm again, feeling like a hot shot. And my first sort of really big client was, I won't name the specific company, but they had just landed a pretty big deal with a large furniture retail seller, where you have to, when you buy the furniture, you got to take it home and put it together. So maybe just a little bit of a hint.
I wonder who that is.
Who that might be. And they had landed this deal where they were going to expand to basically 12 locations across the West Coast. And they would be the installer if you purchased a kitchen from this kitchen, cabinets and such. They would be the installer. Huge opportunity to make millions, hundreds of millions of dollars, because if they could land the plane on these 12, they were going to get maybe the whole US. So I helped them raise money, and I had several people who invested because they knew I was a part of the sort of finance side of things. And essentially within 12 months, the business had completely collapsed. And what I realized was so much of the conventional finance stuff that I was taught doesn't work in the small business space. And in particular, each of the 3 business owners had what I call wealth types. So I've identified these 5 wealth types. They are hustlers, gamblers, optimizers, savers, and outsourcers. And each of these 3 business owners had totally different wealth types. I didn't have the language for that. I didn't have the ability to show them that and help reconcile their differences. And so they were almost running 3 different businesses within this one.
Okay, that's fascinating. That is fascinating. You found these types, and I'm guessing that you coach people on figuring out their type now.
Yeah, in fact, I just launched a couple of weeks ago a platform. This is called wealthtypes.com. You can go there, no cost whatsoever, answer 15 questions, and you find out your wealth type. And what has been really powerful for those people who've gone through the process and those that I do it for internally is now you understand your business partner better. Maybe you understand your spouse better. You
Mm,
understand the reason why you're making decisions the way that you are. Typically, we've been bucketed as either a saver or a spender, but that's not
mm,
really true. We can think about situations where, as a spender, we've saved up for something, or as a saver, we've spent. So clearly,
yes.
that's too much of an all or nothing kind of label.
Okay, that is fascinating. I'm guessing that there's people that are in between because just when you mentioned those five, I thought, oh, I'm a bit of that and I'm a bit of that,
Mhm.
right? So there must be also in between types, like sort of like Myers Briggs, you can get an in between type.
So we don't, that's a future version where we will show you kind of your levels. So you may be
Mm,
60% gambler and 40% hustler. Right now, we tell you your primary wealth type, but you're right. Yeah,
hmm
there are levels for sure.
Right. Okay. And then from there, you figured out once we, well, usually identification is what helps us move forward in life when we can measure something or put a label on it. Labels get a bad rep, but I think it is good to label and say, okay, that's that. So have you found types and that your book how has that helped people?
Well, one of the things that I'm a huge advocate for is what I would describe as playing your game, leaning into your strengths. Again, we fail more than we don't in business. And a lot of times that causes us to adopt what I call business multiple personality disorder, which is just
Hmm.
sort of hopefully a fun and somewhat lighthearted way of describing that we're in so much pain. And so we keep searching for another book, another podcast
Hmm.
to listen to. And then we listen to that. And now all of a sudden, we're trying to adopt somebody else's principles, approach, and then we read the next book 2 weeks later, and so we keep jumping with these like different
Mm,
personas, and that creates a tremendous amount of volatility in your business and in your life, and it's hard to measure
hmm.
that sort of success and figure out what's not working if you keep adopting a different framework, a different approach. And so what I
Hmm.
advocate for folks is to lean into who you are. So to answer your question specifically, understanding your tendencies, say as a hustler, doesn't mean that you
Mm,
should stop being a hustler. It just means that you're going to feel the most alive and empowered in your business. It also means that we have to hedge the downside, which is kind of a technical term, but we're going to have some tendencies that might cause us to kind of blow ourselves up, if you will, using a kind
mm,
of hyperbolic term. And so the things that a hustler needs to do, and I have 5 key recommendations for each wealth type of things they need to do right now, is different than a gambler or
mm.
optimizer. And so it's understanding based off your tendencies, how can I still play my game, but also make sure that I'm not hitting the reset button.
Interesting. So give me an example. What are the five things? Because there's a lot of hustlers, so I'll just use that one. What are the five things, briefly, that a hustler should do?
Yeah, so just because they're fairly detailed, let me just start with one specific thing that every hustler
Mm,
needs to do. Because what they're most guilty of, I have these 4 wealth killers, and they're
hmm
most guilty of the first one, which is always chasing more. So
mm,
dopamine is the molecule of more. So we're all biologically wired to kind of chase more. But the
hmm
hustler assumes that effort is going to be the primary uh, tactic, if you will, to solve their problems. If I just work harder, I just do more.
mm,
But they're not
mm,
often clear on what they need more of. So they tend to default to
hmm
thinking more money specifically. But as I'm sure you know, Gene,
hmm
there's more than one currency. There's time, there's influence, energy, reputation, and money. So we have to be clear on what we're actually chasing more of in that
hmm
moment. Because if we're just chasing
mm,
money, it might get us further away from time or having more energy. So
hmm
the hustler really needs to get clear on number one, what I call your solvable problem, which is taking your unique definition of wealth, the things that you want in your life right now, the 6-pack abs, the second
hmm
home, the car, whatever it may be, and assigning a date and a dollar value to it. So take each
hmm
of those goals, some of which are intangible, assign a date and a dollar value. Once you've done that, you have what I call a solvable problem. You can look at your current resources, how much you have,
hmm
and actually calculate how much more you need to make to fund
hmm
those goals. So they're just assuming work harder, but a lot of times we can show them once we have their solvable problem how they could already get there in the timeline they have set if we could just recover some resources.
I'm so into the solvable problem.
I
I
appreciate.
love the solvable problem thing. Yes. And also the thing about more in the psychology of money. I forget the fellow who wrote that book. Very good book. He was talking about the more for everybody. Everybody keeps moving the goalpost. And I
Mhm.
don't just think it's hustlers that do that. I think people do that in business. I just want more. Well, first of all, what is more? What's the number? And like you said, what's the problem to solve and in what time? And also keep that number of the more and wait till you get to that goalpost before you keep, move it again. So that's just a general thing. I think generally a lot of people do that and not just hustlers. Okay, that's very helpful. Now, what about somebody who's, what was the second one? A gambler. What's the thing that a lot of people are gambling in business, even if they don't gamble in the business, but gamble in their investments, kind of like what I do. Okay,
Sure.
so what's the gambler? What should they be doing? Just one example.
Yeah. So the gambler's challenge is that they want to make as many bets as possible. Right?
Mm.
They're a gambler, so it's like, how can I keep making those bets? Well, 82% of small businesses go out of business because of cash flow problems. So a lot of their bets are not paying off, and they're hitting that reset button.
Mm.
So
Mhm.
the wealth killer that they violate is they're not making what I would call an asymmetric bet, a bet where there's significantly more upside than downside.
Mhm.
Oftentimes they're
Mm.
making a lot of bets where the downside, the bad things, are worse than the potential good things. Maybe they're betting
Mhm.
too much on Facebook ads, just to, I know part of
Mhm.
what you coach is to show
Yeah.
people how to get business without using ads. So maybe
Mhm.
they're putting all of their remaining money that they have, they're gambling it on Facebook ads for the chance of getting a 10 or 12% return.
Mhm.
So there's the downside, I don't have the cash, is worse than the upside, the 12% return.
Mhm.
So it's not to stop making bets, it's to start making bets where they identify that have significantly more upside. And so
Mm.
that part that starts with really rewiring their brain. And I come
Mhm.
from the first part of my career was in the derivatives and hedging space, and I won't bore you with all those details. But if you want to create asymmetry to the upside, the first step is just eliminate all the downside. So
Mm.
I have a process and some workbooks for each of these rules, but I'm showing them how to basically identify all of their bets in their business and then
Mhm.
map out what the downsides and upsides are, and then have a process of eliminating those potential bets that they were going to make that didn't meet
Mhm.
that asymmetry to the upside criteria.
So interesting. And it's so funny. There's a lot of shame, like especially the coaches and consultants of why aren't you putting all your bets on ads?
Mm-hmm.
And I've really fought against that because I agree with you. That's just a gamble. It's let's just throw some money on the roulette wheel with ads. You really need a huge budget for ads. And you need to know that, it's like any investment. If you lost the money, would it ruin your business?
Mm-hmm.
If it will, don't do the ads. But
That's right.
there's all this shame of you should be doing ads and then people burn up all the money and then go under. So that's highly helpful. And when you say you have all this, is certain to you the place where you're teaching people all of this?
Yeah, I've sort of consolidated things under an umbrella of unconventional wealth, which is my personal brand. So
Mm.
I've kind of started to migrate things under this kind of unconventional wealth umbrella.
Mm. And so when did you were doing all the accounting, and when did you say, "Hey, I need to help people with this deeper stuff and not just do their taxes for them?" How did that happen?
Yeah, so when I launched my firm 15 years ago, we launched from the perspective of there was an opportunity to provide very strategic tax planning to small business. It's become a bit
Mhm.
more common now, but we were, if not the first, one of the first firms to lead
Mhm.
with tax planning to small business.
Mm.
And so
Mhm.
in that process, it's a very intimate conversation about their goals and showing them how we can engineer tax strategies to fund their goals.
Mm.
And
Mhm.
part of that, I was regularly hearing folks come in and tell me, I want the tax planning, but I also want these forecasts and key performance indicators, and I need
Mhm.
this dashboard. And so we would build
Mm.
those out, and I'd check in with the business owner 3 months later. Hey, What do you think? How is that helping your business? They're like, to be honest with you, I don't even look at it. Like, what do you mean you don't look at it? You told me this was the thing that I needed. And they told me some version of, well, yeah, we put it all together, but it's just made up numbers anyways. So it doesn't really reflect, we just made it up. And I just picked a growth percentage. And it made me realize that sort of that inflection point about a decade ago now, that what I learned in business school and in the Fortune 500 companies that I worked for beforehand was how to maximize shareholder value, have the most amount of clients, most amount of staff. But as a small business owner, we have to optimize. Optimize is what's the most efficient path towards our number one or top couple of goals. And so once I realized that, I realized, well, yeah, these forecasts and spreadsheets and everything doesn't really work for the small business owner because one, they don't have enough data to make them meaningful. Two, in the Fortune 500 world, the forecasts and spreadsheets are made by accountants and finance people, and then updated and maintained and used by accountants and finance people. So the reports by accountants for accountants. So the applicability to the small business owner just doesn't work. So it was that inflection point where I realized I needed to build an entirely different toolkit and start teaching small business owners from a different perspective.
Fascinating, because it doesn't translate. It's not the same amount of money. It's not the same largesse of a structure. And you're correct. I feel like some people that are in big business don't know how to apply what they learn to a small business, because it is very much different. Some entrepreneur is not some Fortune 500 company with a tiny budget and wondering what they're going to do with their small marketing budget, right?
Absolutely.
Now, how many people have you helped so far with this mission?
Yeah, we've served about 2,500 business owners over the last 15 years.
Wonderful. And so they're coming into your brand and they're either doing Certainty News or Certainty You, and you must have some sort of coaching programs that go along with this.
I have at various times. I've done one-on-one. We've done group coaching. We've done the do-it-yourself. So we kind of have all the different packages. So our CPA firm is very much a one-on-one, whereas the Certainty You and Unconventional brand is a kind of a combination of do it yourself versus do it with you.
Coaching, right. Oh, so you still do taxes for people. You take on tax
so
clients.
Absolutely, yeah. Nth degree CPAs is still still part of kind of my ecosystem, and so we take on 12 to 15 clients a month on average in that business to do really detailed planning strategy.
Wow, you must have a huge team if you're taking 12 or 15 clients on per month, new ones.
I wouldn't call it a huge team, but relative. So in the accounting world, most accounting firms, so 40,000 firms in the US, if you have 10 people in your firm, you're the 400th biggest. So the gap, the chasm is pretty significant. So, and then to get into the top 100, you typically have 150 person firm and up. So there's sort of these big gaps. So we're a firm of, call it 20-ish folks. So that puts us as sort of a medium-sized firm in the accounting space, but not necessarily a large business compared to, say, other industries.
I understand. Still 20. I find there is a problem with the accounting profession in general, that accountants don't have the help they need and they're always stressed out. And I've just found over time, and it's not just me, that there has been a problem with service in that industry, and it's tax season, so I can't do this. And I'm like, well, hire more people. But they're like, it's so hard to hire people. I feel like that is an industry that really needs to get better generally, because it's so hard. No matter how much you pay, it's hard to get that kind of service that you need where it's like, did you sure you did that? Oh no, I forgot. It's like, what? You forgot? It's insane to me that sometimes I've hired like really expensive accounting small firms, and it's still almost like, oh, sorry, we just got so much work to do, which I find extraordinary. So have you found that as well, that there's just this problem in the accounting industry?
Well, I have a lot of thoughts on that specific topic, so I will do my best to be very succinct in responding. And it starts with, I love this quote that I'm paraphrasing from this guy, W. Edwards Deming. It's a big part of my book as well.
Mm-hmm.
It says, every system is perfectly designed for the results you're getting.
Mm-hmm.
And so if you don't like the results, you have to, I guess, accept it, which I don't
Mm-hmm.
like that. Or you change the system, or you change your behavior within the system to get a different outcome. And so when I started my firm, I had that same observation that burnout was really high, that
Mm-hmm.
partners were on their third, fourth marriages because of the hours during busy season, turnover again staggering, and client satisfaction was often pretty low, even at
Mm-hmm.
the larger firms that I was working at. And so I thought, well, how can we do this in a different way? And in the small to medium sized firms, they typically will do 600 to 800 returns per partner work on in some fashion during the 10 weeks of tax season.
Oh, that's a lot.
So if you think about 600 to 800, they might be touching 60 to 80 returns a week. Now, part of the big issue is that they haven't talked to these clients since they talked to them a year ago. So now you're trying to get up to speed on this new information in a very tight window of time. You're working an insane amount of hours to try to accomplish this. You can't get to everything. And it's a systems problem. So we thought, what can we do? How can we pull a George Costanza, if you're familiar with Seinfeld, and to basically do the opposite? Like, well, right now we're playing Russian roulette. Every time we pick up a tax return, we have no idea if they're going to owe a bunch of money, what's happened. We have almost no context. So let's start by onboarding them and building out a detailed tax plan to show them how to minimize their tax exposure. Now, that's incredibly hard to do because you don't learn that in undergrad or in a master's in tax program. You have to go out and learn it on your own and do the research and read the court cases and go to all the continuing educational stuff. But let's show them how to minimize their taxes. And then let's just have an ongoing relationship. And let's teach them how to also estimate their own tax liability. So we're going to update it, but they also know back of hand how to calculate it. So they're never surprised on what they owe. And so what ends up happening is that tax season is an afterthought to some extent. If people already know what they owe, you already have the background information on who they are. And so you're not just finding out new information the first time.
Right.
And so there's a bunch of other little nuances from there, like we file extensions for every client in January before tax season starts. So everybody knows their tax liability, and a bunch of other nuances like that. And it's basically, I summarize it as moving from being an archaeologist, that's what most CPAs are, they're always just digging up the past, to an architect. Let's take your goals, your future, your solvable problem, and utilize the tax code to help fund that. But we're always being future focused. So taxes should never be a surprise because the deadlines are the same every year.
Right.
So there should be no tax surprise.
Yeah, somehow I'm never surprised by that, but my accountants are. I'm like, but didn't you know that was the tax date? Because I'm ready. What do you need? It has been for me and many people a frustration when you're like, sure, what do you need? What do you need? And it's like, oh, we have one day, and you got to go this, and it's so it's been hugely stressful. Do you also work with compliance companies that help figure out all the different LLCs and the holding company and all that stuff as well?
Yeah, so we have built a framework for how we believe is kind of the best practice, because we've been doing planning, leading for planning for 15 years. We have a framework for entity structure. We don't do the legal work, so we refer that out.
Right.
But that's part of how we onboard our clients, is a thorough entity review.
Okay, good to know, because that's so important to work out the different LLCs, which state, holding company, and then put a trust at the top to flow through.
You're right.
Right. Okay, good. We're on the same page. Well, that's interesting. So I agree with you. And what I do know that most people don't know is how many pages in the tax code? Is it 400 or so? What's the whole tax code? How many hundreds of pages is that?
Oh, it's more like in the hundreds of thousands of pages when you factor in.
Okay.
Yeah.
Right. Most accountants, to become a CPA, don't they just need to know like 100 and something in those pages to get their license?
So there's a couple different types of licenses where you can represent a client in front of the IRS. They're enrolled agents, CPAs, and then attorneys.
Okay, so let's talk about CPA because that's just a standard.
Yeah.
How many pages does the CPA need to know to become a CPA to pass?
Yeah. Of the tax code specifically, I don't have a firm answer for you on it, but there's 4 sections to the tax code.
Mm-hmm.
4 sections to the CPA exam. Taxes is really one of the 4 sections.
Mm-hmm.
But what I have to tell you
Mm-hmm.
is the first time pass rate of the CPA exam is 12%,
Mm-hmm.
lower than any other professional credential. And they've only made it harder. They attempted to make it easier about 20 years ago by allowing you to take the sections individually. It used to be you have to sit
Mm-hmm.
down for 2 days and take all 4 sections.
Mm-hmm.
But in an attempt to sort of make it easier, they made it
Mm-hmm.
harder. So pass rates have gone down. 75% of CPAs have hit retirement age. Accounting enrollment is down 30 to 50%. First time pass rate is down somewhere between 20 and 30%. So part of the issue is there is a shortage of CPAs. Part of the issue is that most CPAs are winding down their practices. So
Right.
they aren't staying up on the new legislation. I could give you so many examples, but I joke that a new strategy to most tax CPAs is like something that came out in the last 5 to 10 years, which is
Wow.
unacceptable.
Really? Yeah.
Because you got to keep up on, if you're going to be really helping your clients pay the least amount of tax, you have to be up on what came out this year, what applies right now. And that's
Right.
hard work because you have to keep reading the court
And
cases
studying.
and study it. Yeah, it's an
Right.
ongoing study.
Well, there are people I'll just be really transparent. I won't hire just a normal accountant. I will only hire certified tax strategists who are accountants because those people have to study all those pages that the normal CPAs don't need to study. And that's to me where I've found more legal savings is in the actual like the Augusta Rule. A lot of people don't know about that, right?
It's staggering how few people know about the Augusta Rule.
Right. And that is like one of the biggest tax saving strategies ever is the Augusta Rule. I didn't know about that. And I hired my first tax strategist. And basically, that was all they knew. They had decided that they were going to build their business on knowing about the Augusta Rule. Then I hired another one and she goes, oh, that's nothing. She goes, we know all these other strategies. But unfortunately, her service was so bad. So it's like, do you choose bad service where you're like having a heart attack because your taxes aren't getting in? Where you're, eventually, where the service is so bad. But so it's always like, why can't we just find the tax strategist that knows this stuff who has good service? So are you that company? Because if you are, everybody should flock to you.
I would argue that we are. And part of it is that we have a track record of doing this for 15 plus years at this point. And I built the whole business around planning and ongoing support. And so I've seen the evolution of people coming into the industry, and they're oftentimes just kind of regurgitating the 30 to 50 core strategies that are pretty publicly out there at this point. Things like the Augusta loophole. We have our own approach, which I call the 4 levels of tax planning. And you mentioned it in my bio, I started my career at the Accounting Standards Board, so I helped write an accounting standard. And so we come from a different point of view, I guess, which is very research first. So a lot of people, what they don't know about the tax code is they think the IRS wrote it. It's written by Congress. Department of Treasury gave IRS the authority to enforce it. And that may seem like minutia, but it's really important to understand because since the IRS is really just an enforcement agency, that means as taxpayers, you don't always have to agree. Now, it takes a certain type of personality to want to disagree and battle out the IRS. But the good news is we like those people. They're not necessarily clients of mine. We like those people because they go to tax court. And then all of those court cases become public information.
And then it's a precedent.
It's a precedent. So the most optimal way to approach tax planning is to have a team of people who are keeping up on those court cases and then also looking at the IRS audit manuals. That's public information on how the IRS is going to enforce the strategies. And then if you're up on those 2 pieces, then really what you're doing is just copying the precedents that's already out there. So in doing so, we end up doing 2 things. reducing risk because we're actually following what the court cases and the audit manuals say they want, and we're reducing our taxes at the same time. Reduce risk and reduce tax.
And taxes. So, because what you don't want, you want low, for me, part of my whole reasoning is you want low risk people to do things like your taxes. That is not a professional that you want to hire who's a high risk, because high risk accountants, that can really, mess everything up when you're going back and they were a little too risky. So you want a conservative accountant who knows the rules. So it's like, we're conservative, but hey, there's this thing called the Augusta Rule, and we're going to save a ton of money on that. And, oh, by the way, there's all these other strategies that nobody knows about because we actually read the whole tax code. So is that like, do you have like a team of researchers that you make sure that you read the whole tax code? Because most accountants haven't even read the whole tax code. They're just reading what they need to pass the CPA.
Yeah, it's reading the tax code, it's reading the IRS audit manuals, it's reading the court cases, it's reading the proposed regulations, etc. So it is staying up on all of those things on a regular basis, and then collaborating with other professionals, other third parties that are specialists in those specific rules, whether it's federal R&D credit as an example. Like, we have partners who are former IRS commissioners that implement these specific kind of credits. So we're using them also as a backstop for research. What you were talking about on risk, I have a slightly different point of view, and I'm not sure that you'll disagree with it, but just to share with it, is that I believe that our duty, most CPAs decide risk for their clients. And that's really problematic. If I was an investment advisor, which I'm not, I don't make investment advice, but if I were, when I onboarded you as a client, I'd have a fiduciary responsibility to understand your risk tolerance. Right? And so we'd have to figure out, small, medium, large, what risk, but we'd put you into investments based off your risk tolerance. And if we didn't, we'd be personally liable for violating your risk tolerance. That's the same thing I believe as a CPA. We have an ethical obligation. It's not in the ethical statutes, but to understand a client's risk tolerance and then educate them on all the legal available strategies. And then they get to opt in or not. Because one client's risk tolerance might be slightly different than another. And so our job is to, here's what's available to you. And you're going to opt in or opt out.
Right.
Now, we're not doing anything that isn't
illegal,
vetted or is unethical in any way. I'm still, we're in compliance with what's called the more likely than not criteria. So there's nothing, sketchy that we're going to ever do.
Right. However, it might elicit an audit or a red flag. And that's also a risk that some people don't want to take. Even though we're doing nothing wrong, you might say, well, this might actually cause an audit. Are you okay with that? You're going to pass the audit. Some people will be like, no, I don't even want to have an audit because of the time it takes, or the hassle, right?
I could share specific example. We've had very few, knock on wood, of audits in our 15-year span, but we had a client who hadn't prepared taxes in 7 years. There's a whole backstory for why. They were getting ready in the next year. They were going to sell their business to a large tech company. And so we got them compliant on their returns, and there was a very specific accounting method that we were applying that resulted in them owing essentially no tax for the 7-year period of time. They also qualified for what we had calculated to be somewhere around a $2 million federal research and development credit. And they said, look, I'm already 7 years, doing this. We're taking a very specific stance on how we're reporting this. I'm going to skip the credit. Okay. Understand. So we file it all. Then he closes the deal, sells his business for $50+ million to a tech company, has a decent sized tax bill from that. And he says, you know what? I want to go back and claim that credit, the $2 million R&D credit. And we say, well, if you do that, there's no way the IRS is going to send you a $2 million check without. So we are opening Pandora's box here. And so they understood that, and they claimed the credit. At the end of the day, they passed the audit, got the $2 million, but it was a case of they had kind of informed consent from the beginning. They opted out of the credit. That was their choice.
Mm-hmm.
And they
Mm-hmm.
decided to amend later, knowing that the likely consequences of that. And so it's
Right.
about just educating clients on the
consequences. What will
the
happen?
options, really, and the potential consequence.
Right. And do you do bookkeeping as well? So there's a close synergy between the books and the accounting, or do you just do the accounting?
We are a full service firm, so we do bookkeeping for
Right.
some
And
clients. It's not,
payroll and all that.
yeah,
Yeah.
yep.
Okay. Love that. And so I'm curious, do you across the board just apply the Augusta rule to everybody because it just works?
Yeah, they have to be an S Corp or C Corp to qualify. So
Sure.
assuming that we have that in the place, which they usually do, then
Yep.
we are advocating and teaching them Augusta loophole.
Right.
That is in the 4 categories of tax planning. That's our first
Yes.
first tier. Things they qualify for, they didn't know about. We're trying to
Yes.
get them to
Yes.
the top tier, which is making all future income as non-taxable as possible.
Right. And does that also involve like moving your company to a foreign country legally?
Generally not. We don't. That's generally
Oh, okay.
not.
Because there's another whole strategy of a colleague of mine where she actually legally helps people move their entity to another country so that but you're still paying personal taxes. So it's
Mm-hmm.
completely legal. And she's helped people to greatly, reduce their business taxes, but still pay personal.
I think
It's
there are
interesting
some other strategies that can get you the same outcome with.
without having to do that.
Yes.
Yeah. Like trusts, correct?
Trust potentially. And part of our focus is what I call having a net worth focus. So if
Hmm.
we want to help you grow your net worth, because as you grow your net worth under the SEC, you become, it's
Hmm.
called a qualified client and then a qualified
Right.
purchaser. And that
Yeah.
enables you to use certain types of what's called structured
Instruments.
investments.
Yes. Like you mean like accredited like accredited.
So yeah, there's accredited investor, and then there's 2 more tiers above that.
Ah, okay, got it. You want to get people to keep moving up so they get more and more benefits. So it's actually strategy and consulting as well as just doing their taxes, right?
That's right. Yep. As they scale their
Right.
net worth, they qualify for more. They qualify for more types of investments or types of structured
Mhm.
investments specifically that can
Mhm.
have certain tax
Got it.
advantages.
So interested. I'm guessing you're also getting into then they want to give money away, starting a foundation for them because then it's a better way. Probably all of that. Well, this has been highly fascinating. I love talking about accounting, believe it or not, because
Yeah.
I think when you've had so many problems with accountants and you're learning more and more, it just becomes like, well, for before I started realizing there was such a thing as tax strategists and even like the very beginning Augusta Rule thing, that was like a big jump for me. I always was asking my accountants, is that the best you can do? Like, is that the best you can do? No, that's it. And I thought, no, there's more. I knew there was more. I thought this basic running my taxes through. And then I started to earn more money and I thought there's got to be more,
Mhm.
oh no, that's all we can do. I'm like, okay, I'm not finding the right people, but it really is. And I love this conversation for people that are on a cusp of maybe making a bit more money to really look into tax strategists and not just believe everything your average CPA, even though you love them. People go, oh, but I love my accountant. Are you paying a lot of taxes? Yes, but I love them.
Yeah.
Maybe, question, is this as good as it can get? And I really wanted to have this conversation with you to open up that conversation to help more people to legally reduce their taxes. So, Dan, I want you to share something before we close this off. What's some one mindset or strategy you can just share with people just to take a first step towards, developing this all?
Well, yeah, my mind is going in a bunch of different directions, but we already kind of talked about wealth type. So to me, the first step is
Mm,
always understanding your wealth type.
mm,
But what we need to really understand is that every business decision, and we might even argue every decision, is a financial decision.
mm-hmm,
And so when we tie up our money, our resources in one thing, it's removing an infinite number of other things we could have been involved in. Now, of course, infinite is hard to
mm,
think about because it's the largest number possible, right? But so understanding resources are scarce and being very
mm,
intentional about how we allocate resources. There's a simple process
mm,
you can go through to recover those resources. take all your expenses by vendor. This is a report you can pull out of QuickBooks or Xero. So expenses by vendor for the last 12 months. So rolling 12 months. Drop them into a spreadsheet of your choice and add a column that says core. And then go down and mark yes or no. A core expense, it's my language, but a core expense is an expense that your business requires to operate.
Like paying wages.
Right, exactly. All of those things that are not core, those are bets that you've made. And you're assuming that there's some assumption you made that that bet is going to grow your revenue, it's going to give you more time, whatever that may be. So then I want you to put in what your ROI is, what your return is on those bets. I think what you're going to find is that there's a lot of recurring expenses that you forgot about, that there's no ROI because you're not using them anymore. I've done this exercise and found thousands to hundreds of thousands for clients just on stuff that's on auto bill and they forgot about it. But all of those bets that are getting you a less than 11% return need to be canceled, because you can get on average a 10% return if you just put that money in the S&P 500. So we need to do better than a S&P 500 index fund. Hopefully we're getting our solvable problem return that we need, the return to fund our goals and our timeline. But anything that isn't getting you a return, we need to cancel, recover, and reallocate those to bets that are going to get you that return you need. Otherwise, biggest risk in life is not living the life that you want. So you got to recapture those resources and put them towards funding your goals faster.
I love that. When I was doing classical business coaching, I used to go through everybody's, like all my clients. I didn't do it in that way, but I would go through all their charges and I would automatically save them about $4,000 a month, like just automatically 4 or 5. And like, wow. Luckily, I am very frugal about spending sometimes. However, I do big gambles, like you just said, but luckily I can count those. And we're always going through and saying, do we really need this? What is the value of this? Why are we still subscribed to this? So I'm pretty good at kind of keeping it lean and mean, because that's just been like an instinct with me, which has been great, because I see a lot of business owners forget they have charges. Certainly I have done that. And I go back and I go, why am I still paying for this? But I also forget subscriptions. And my daughters were laughing because I was paying for some app, some video app, and I'd used it once and they said, Mom, you've been paying for that for like 15 months and you never used it again. You know, it was like, I mean, not the biggest thing in the world, but that was just money thrown down a drain. Well, this has been fantastic. And I urge people to go to wealthtypes.com. It's free. Take the test and start just doing some analysis on what your wealth type is. Dan, thank you so much.
My pleasure. Thanks so much. Appreciate it.
You're so welcome. And I hope you love this show. Please share, please subscribe, and please turn up again. You're listening to the Business Wealth Impact Podcast, your source for empowering information and cutting-edge ideas from the world's top minds. I'm your host, Jeanne Amlour, founder of seven-figure coaching company, Jeanne Amlour International. Join me on a journey to unleash your potential and create your highest success. Welcome to Business Wealth Impact.